Are you planning to buy your first home but feeling overwhelmed? Well, let me tell you, you're not alone. This is a major life decision, and it's perfectly normal to feel a bit anxious. But fear not. With the right guidance, you can navigate this journey with ease and confidence. In this video, we're going to explore the essentials of home buying. We will discuss how real estate agents and mortgage professionals can be your allies, guiding you through every step of the process. We'll debunk the myth that you need a large down payment to buy a home, and we'll also talk about closing costs and who usually foots the bill. Moreover, we'll delve into the importance of your credit score and how it affects your home buying prospects. Lastly, we'll explain how your income and debts influence the monthly payments you qualify for. So, are you ready? Let's dive into the world of home buying and make your dream come true. Ever wondered how a real estate agent or a mortgage professional can help you in your home buying journey? Well, let's start with real estate agents. They are your partners in this adventure, using their deep knowledge of the housing market to find your dream home that fits your budget. They negotiate with sellers, handle paperwork, and provide advice on when it's the right time to make an offer. On the other hand, mortgage professionals, often known as loan officers, are your financial guides. They help you understand the complex world of home loans, interest rates, and credit scores. They'll help you figure out how much you can afford to borrow, guide you through the application process, and even give tips on how to improve your credit score to get better loan terms. So, while buying a home may seem daunting, you're not navigating it alone. Remember, you're not alone in this process. These professionals are here to guide you every step of the way. Think you need a large down payment to buy a home? Think again. In the past, the conventional wisdom held that you needed to have a sizable down payment saved up to buy a home. But times have changed, my friends. Today, there are numerous loan programs out there that require much less. In some cases, you might only need 3% or less of the home's purchase price. That's a far cry from the traditional 20%. Now let's shift gears and talk about closing costs. These are the fees and expenses you pay to finalize your home purchase, and they can add up. But here's the good news. Sometimes the seller will agree to pay some or a large part of these costs during the negotiation process. And wait, there's even more good news. Some states offer grants or other types of assistance to help cover these costs. These programs are often designed specifically to help first-time homebuyers. Plus, there are federal tax credits available that can also help offset these expenses. Make sure to consult a tax professional. So when you start adding up the numbers, you'll see that the initial financial hurdle of buying a home might not be as high as you thought. Remember, your real estate agent and mortgage professional are there to guide you through this process, helping you navigate these costs and find the best options for you. So, you see, buying a home might be more affordable than you think. Worried about your credit score? Let's talk about it. Your credit score is a numerical representation of your credit worthiness, a snapshot that lenders use to gauge the risk they take on when lending you money. It's based on your financial history, including how much debt you have, how well you've managed that debt, and if you've reliably made payments on time. Think of your credit score like a report card for your financial responsibility. Scores range from 300 to 850, with higher scores indicating lower risk. When it comes to buying a home, this magical number can impact the interest rate on your mortgage, or even if you're approved at all. Now, if you're feeling a bit uneasy about your score, don't worry. It's not set in stone. A good loan officer can guide you on how to improve your credit score. Simple steps like paying your bills on time, keeping your credit card balances low, and not opening new credit accounts unnecessarily can help bolster your score over time. Remember, your credit score is just one factor in the home buying process. It's important, yes, but don't let a less than perfect score deter you from pursuing your dream of home ownership. There are resources available to help you improve your score and secure that loan. Your credit score is not a barrier. It's a stepping stone on your path to owning your first home. How does your income and debt affect your home buying capabilities? Let's find out. When it comes to buying a home, loan officers play a crucial role. They are the ones who assess your financial standing and determine the loan amount you qualify for. But how exactly do they do this? The answer lies in two crucial factors: your income and your debt. Let's start with income. Your gross monthly income is the total amount you earn each month before taxes and other deductions. This can include your salary, any bonuses, and other income sources. Loan officers take this figure into account to ensure that you can afford the monthly mortgage payments. But income is just one side of the coin. The other key factor is your debt. Specifically, all the debts that report to your credit report, such as credit card balances, student loans, car loans, and personal loans. These monthly payments can significantly impact your ability to make your mortgage payment and hence are taken into account by the loan officer. So, how do income and debt come together in the loan qualification process? They are used to calculate your debt-to-income ratio. We call this your DTI. This ratio shows how much of your monthly income goes towards paying off your debts. A lower DTI indicates a healthier financial standing and may increase your chance of qualifying for a loan. But here's the thing. Even if your DTI is high, it doesn't necessarily mean you're out of the running. A good loan officer can guide you on the steps to take to lower your debt and improve your DTI. Remember, every person's financial situation is unique. What works for one person may not work for another. It's crucial to work closely with your loan officer, understand your financial standing, and make informed decisions. Understanding your financial standing is key to a smooth home buying process. So, don't be afraid to ask questions, seek advice, and take the necessary steps to improve your financial health. After all, buying a home is a significant step, and you want to make sure you're on solid financial ground before you take the leap. Ready to take the first step towards owning your dream home? Reflect on the guidance we've shared today. Your real estate agent and loan officer are your allies. Don't feel pressured about a hefty down payment or closing costs. Remember, credit scores are just a way to gauge your risk to lenders, and there are ways to improve it over time. And don't forget, your income and debt also play a role in loan qualification. The journey of buying your first home starts with a single step. Don't hesitate to reach out for help. Your dream home is waiting.